We have Fianna Fáil's final solution today. One question stands out. Is there the slightest shred of credibility left in this government's banking policy? Today's massive bailout announcement is the natural consequence of the decisions made on that fateful night of September 29, 2008. We are at exactly 18 months plus 1 day after that fateful night. That night you were surrounded by bankers. You took advice only from bankers. You meekly promised to jump through whatever hoops they put in front of you, and your Taoiseach even went on radio to say that no cheque would be big enough for him to sign if it was necessary to meet the insatiable demands of the bank. The too big to fail doctrine applied with no economic justification, even to Nationwide and Anglo. It has taken a savage toll on the country, and the raw evidence that was highlighted in the Central Statistics information last week. This was supposed to be the cheapest bank rescue in the world. The Taoiseach said no cheque was too big to write to save our banks, and today we're beginning to get a more rounded picture of what that cheque that the Taoiseach is proposing to write today and over the next 10 years. A 36 billion bank bailout package on top of NAMA. And NAMA is 50 billion plus, maybe a little bit less because the discounts are higher. We don't know yet. Jim Kemmy, the late Labour Party deputy, once joked that while politics might seem easy to some, others had to come by the scenic route. Fianna Fáil are certainly taking the scenic route to nationalisation via a mega NAMA bailout, as taxpayers now look to be in full or majority shareholders in the 4 institutions listed today. All nationalisations, of course, are not created equal. We had the panic nationalisation of Anglo, and now we have the belated nationalisation or part nationalisation of the rest. Labour proposed a different approach. Following the model of the successful Swedish bank rescue, and as articulated by Bo Lundgren when he spoke in Dublin, the Labour Party proposed taking our key banks into temporary public ownership before cleansing their balance sheets for a return to the private sector. The key attraction of this approach was that it would have eliminated the valuation risk and the bailout element of NAMA. And that still stands. It's not too late to rethink NAMA. There would not have been any need for the fantasy of long-term economic value, and there would have been a much higher prospect of an uplift and gain for the taxpayer at the end of the process. That's what happened in Sweden, and your Minister for Finance has confirmed that on many occasions. Having taken the scenic route, we will now be left with the worst of both worlds, a nationalised banking sector alongside the risky NAMA bailout. We've now got both. We've the worst of everything. Not only was the scenic route the longest route, wasting 18 valuable months, it was also the most costly. The failures of our financial system demonstrate the more general failures of our entire economic system. It is inevitable that changes will come from the events of recent years, and the decisions of the new regulator and the Governor of the Central Bank are the first examples of a tighter regime that will move us into line with the more general regime that's now going to follow the new Basel approach. Nevertheless, there remains one fundamental issue that is only partially treated today. The government has worked on the assumption that the banks are favoured institutions that must be secured at any cost, even when they become insolvent by their own decisions. This House is going to have to set out new rules in law for future bank collapses. These laws will need to be tough and among the toughest ever to be brought to this country. We've endured enough bad banking behaviour in Ireland in the 1980s and some in the 1990s. I have to say I wouldn't take anything that the banks now promise on trust. Ireland has paid, and obviously from today's announcements, will go on paying a horrific price for the banking policy disasters of the government. Youth unemployment in Ireland has risen 170% in the past 2 years. There are more than 85,000 people under the age of 25 on the dole. When he visited Dublin some time ago, Danny Blanchflower, who was formerly on the Bank of England Monetary Policy Committee, but he's also an expert on youth unemployment, he spoke very feelingly in Dublin, and to me privately, possibly to the government as well, that as the world expert on youth unemployment, all the research shows that young men in particular, it doesn't affect young women to the same degree at all, young men in particular who become unemployed for more than 6 months and going into more than a year or two, that the effects are not temporary. The effects actually last for the rest of their life. It maybe takes because young men lose intrinsic confidence, belief in themselves, and ability to get up and go if they face a prolonged period of unemployment. In many ways, the young men of Ireland are the principal victims of the banking disaster, not just now, but into the future. We have offered here in the Labour Party a whole series of suggestions by different Labour spokespeople about, for instance, internship schemes, training schemes, graduate employment schemes, anything to give young people who are in this country, particularly young men facing long-term unemployment, an opportunity to get up and not actually have to give in to a kind of despair and, if you like, loss of confidence that will affect them for 2 or 3 decades. The offer is still there. The Labour Party is willing to work with you to see that happening, but Taoiseach, it's getting very late. You know, we're now 2 years into the building bust. So many young men who lost their jobs in the building industry, unless they've had a chance to go abroad, which some of them have had, they really are getting to crisis time where they have nothing to do other than to collect unemployment assistance. Our country has had to experience a horrific recession, lost jobs, lost pay, lost taxes, lost investments in infrastructure, lost prosperity, and lost personal happiness for tens of thousands of our citizens. The bank bailout today, Minister Lenihan started some of his comments with complimentary remarks and encouraging remarks made by various international figures in relation to Ireland. But can I just say that in the eyes of market analysts, the announcements today exacerbate the fiscal problems faced by the Irish state. And to be honest, one question I have for Minister Lenihan is, what is the impact of today's statements on the entire strategy agreed with the European Commission to reduce the deficit by 3% by 2014? For all practical purposes, the Government of Ireland is about to issue bonds that amount to 1/3 of our entire GDP for distressed bank assets of dubious or no intrinsic value. So you may have negotiated an arrangement to keep this off the formal balance sheet, but markets and rating agencies are not that easily misled. And while the Minister understandably wanted to refer to people who were encouraging to Ireland in their public statements, there have been key articles written in the last month, particularly by Simon Johnson, the former deputy head of the IMF, advising America not to become like Ireland. And the Taoiseach must have seen it because it was doing the rounds when he was in the States. We also have had an article by Paul Krugman, again, very understanding in a certain sense and wanting to be favourable towards Ireland, but pointing out the serious difficulties that we have inherited through the bank bust and warning other countries to try and not be like us. And, you know, as I said, there are people, particularly in the ECB and in the Commission, who want to encourage Ireland. That's good. But let's be realistic about what the impact of today is. Sovereign debt that you you know, our sovereign debt to GDP is going to go over now 100% during 2011. The Minister didn't say. I think that's a pretty fundamental indicator. We have been very smug about Greece's problems, and a lot of commentators here have been kind of smug about the fact that we're not Greece. But remember that the interest rates we pay on our national debt is the second highest in the Eurozone, above Spain, Portugal and Italy. And ironically, as you would know, Taoiseach, Greece is one of the few good things to happen to Ireland, because of the difficulties in Greece, the euro has been under pressure and it has fallen somewhat compared to the dollar and to sterling. And as you know, one of the best things that can happen to us as a country is that if the euro falls a bit, our exports and our export of services gain, because we export so much to both dollar and sterling areas. There is evidence of anxiety in markets about Ireland's debt exposure. Therefore, new borrowing and any debt that has to be refinanced may face higher interest rates. And again, that's going to add a lot to our day-to-day spending. I don't know that the government has been open and upfront about this aspect of today's decision. What is the impact of today going to be long-term on the rating, the international rating of Irish sovereign debt? And it does ask who calls the shots in Irish public policy. All the banks, but particularly Anglo and Nationwide, looked after the developers. In turn, the developers looked after Fianna Fáil in the classic manner of crony politics. And a powerful lobby of these same developers, the investors who bought the bank bonds and government politicians with links to the failed developers, have conspired to have our taxpayers, rather than our banks, our bank creditors, carry the cost. You haven't ever actually answered. I understand from the briefings we got today that the Tier 2 subordinated debt is about 10 billion, 2 billion in the case of Anglo, and possibly 4 each in the case of Bank of Ireland and AIB. Tier 2 subordinated debt is risk. These are people who invested for high rates of returns with a very high level of risk. Yet you guaranteed them all, and there's 10 billion of them outstanding. Why are we hearing nothing of a negotiation with them? Alan Duke said to me on a TV programme the other night, that if you negotiated with the Anglo Tier 2 subordinated debt, it's only 2.4 billion or something like that, you'd only save $1 billion. What is the crazy economics that $1 billion no longer counts in terms of saving? What is the rationale? Is this discussed between you all? And as for the other 8 billion, you know, you haven't explained, as a Tier 2 subordinated debt, why it is not possible to sort that out at a very heavily discounted rate. You haven't told us what the senior Tier 1 bonds are. Is it 30? Is it 40 billion? Have you even attempted to suggest a negotiation with the senior bondholders? I mean, if there's improved sentiment towards Ireland internationally, these measures today could put all that at severe risk, as people wonder how it is that a country facing so deep an economic crisis can casually add a vast sum to their national debt. We don't know any details as yet about the administration, other than the legal announcements in relation to the Quinn Group. But we do understand, Taoiseach, that the Quinn Group owe something like 2.5 billion possibly to Anglo-Irish. We do know that what happened with the Quinn Group was central to the fall of Anglo-Irish, which in turn was central to the fall of the rest of the banks. What's the story after the announcement of the administrative process today in relation to that 2.5 billion? When Anglo-Irish transferred 36 billion to NAMA, that will mean that the 2.5 billion of the Quinn debt left, as I understand it, maybe as much as 10% of Anglo's loan portfolio remaining. I know they were trying to suggest that they would pay Anglo over an 8 to 10 year period. That was what was in the public media. It wasn't denied, so presumably there's some validity to it. But what's your take on it? I mean, is this another Pandora's box? The regulator indicated today that there was about $500 million in issue in terms of the fall in the value of investments in the Quinn Group. They are one of the Quinn, the insurance group, the health insurance group, as I understand it, are the companies in which the falls in value have been addressed by the regulator, and the regulator has put them into, has looked for an administration. Why did we hear nothing about that today? Because just as they were at the start of the story, it's ironic that their administration comes today as we are hearing the government's final solution, and yet we have no comment by government. But perhaps that will be done tomorrow or on Thursday. I don't know. I think the Taoiseach should actually make a very detailed statement to the House in relation to that group. It's an important employer. I think it has in total 5,000 or 6,000 jobs over all the different companies, and I understand that several thousands of those jobs are in the insurance-related companies that are primarily affected by the announcements today. So I do think that there should be some announcement in relation to that. Can I ask the Taoiseach as well, in relation to what's been laid out before us here? The Minister for Energy was speaking on a radio programme on Saturday in the course of his conference. He suggested that in Ireland's case, we could be asked to leave the euro. Now, Minister, can I just say to the Taoiseach that I understand from what Eamon Ryan has to say that he is actually part of the government group. He's the link person for the Greens into the cabinet group that deals with banking. I mean, is he serious? Is this what the cabinet group is suggesting to Fianna Fáil backbenchers, that Ireland would have to leave the euro? I don't think the average Fianna Fáil backbencher would believe that. Okay, because it's not provided for anywhere in the treaties. But if we have that kind of economic illiteracy from the Green member on what is apparently some kind of cabinet subcommittee dealing with the banks, I think we're entitled to know what the various government parties think is actually the Irish situation. I just want to end with this. We heard about haircuts today. We also saw in the material that was given to us a new concept of COCO. These are special instruments that may be part or not of this rescue deal. But in relation to the haircut, I was wondering at times, was it not so much a visit to a barber's for a haircut, but a visit to a head shop that was inspiring some of the people from some of the fantasy economics that we heard today and that we continue to hear. But at the end of the day, it is ordinary Irish people who will be bearing the brunt of this for this generation and for the next.